report. Let's get started. It is 9:30 on February 6th. Trading week is the 6th through the 10th. Opening bell just kicked off. We're looking at the SPY at 410 after a little bit of a rally last week. The markets did finish positive, not by a lot, but they still had green weeks. A lot of it was faded on Friday, pretty hard actually. So for the week, the Dow Jones finished flat. It was negative 0.15%. The S&P was up 1.62%, and the Nasdaq 3.31%, and Bitcoin sitting around 1.46% for the week. The Fed last week on Wednesday did hike rates 25 basis points. The Bank of England hiked rates 50 basis points, and the ECB hiked rates 50 basis points. So that brings the grand total. CBRates.com, USA, quarter basis points raised, 4.5 to 4.75 is the official cash rate for the US. The UK brought it up to 4%. The Eurozone, if you're following my mouse here, up to 3%. So banks be tightening. We'll see if that trend continues, or if there's enough language out there similar to what the Fed is doing, where they've been talking it up for quite a while. The markets had the chance to price everything in, and now we're looking at kind of the larger pause. The Fed is expected to raise rates again in March. I believe that's Wednesday, March 22nd. Let's take a look. So this is, Wednesday, March 22nd, a 97% probability that we're going to raise another 25 basis points. And what I talked about last week in the trading rooms is, are we going to see a change to November, December? So if this is where we get rates peaked around this essentially 5% level, what do we have for December? Aha, so it did change from last week. So if we raise rates here, this November, December, if we looked at this last week, the highest probability was not the highest percentage, or the highest rate percentage. It was actually down by 25 basis points. So anyway, higher for longer. That's the language. The market still rallied regardless, though, right? I mean, we still had a pretty good rally. This is bull trap territory. We're going to see how this, the first couple of days, especially trading close. I still think that a decently bearish push back down below 410 gives this market a bit of a fake out. So I'm not necessarily saying that we've got to return to lows at 340 or lower, but I will say that not necessarily justifying new highs, but you never know. I mean, we could have a pullback here. Maybe we have a higher low. There's a low from October, a higher low to kick off the year, and possibly another higher low around 400. Excuse me. And maybe, just maybe, we'll see something like this. Not sure yet. But if the Bears take convincing control, then I would look for us to range. And this 410 high remains, this 380 support level remains, and we're just going to have a grind. Bit of a sideways move on the overall markets. So here's the S&P, same thing. So I talked about this last week. Is this potential open space for a melt up? This blue line is over the last 50 years, we've had a rate hike cycle for the Fed, and this is where the market is finished 12 months after. So that rate hike started in March of 2021, and actually take that back, March of 2022, and we're going to see if that's accurate. So 7%, and I think on the SPY I have the other one. Yep. So right here, about 6.9% is the 12-month average after the rate hike cycle starts, and 24 months after, which would be March of 2024, puts us up around 19.3%. Also listened to a pretty interesting podcast this weekend. It was Weiss Capital Management in Search of Green Marbles. It was like episode 65, 66 with Lundy Wright, but he was talking about the third year in a presidential cycle, going back to like 1928, has historically been the best for markets. And I think it's averaged like 13% a year for the indices, the S&P 500, which is pretty convincing since the normal average is like 7%. So again, I mean, just kind of made me think, even though there's probably going to be U.S. political posturing and the debt ceiling and all this stuff going, making headlines for us this year, it may not be enough to really derail the market like we saw last year. So could be, tighter, right? Could be not as exciting, not as volatile, but I'm wondering if the market just kind of sticks with a general direction. Maybe it's up, maybe it's down, maybe it's sideways. We have to be prepared for that. Okay, I'm gonna get logged into YouTube. Say hi to everybody. I guess, oh my gosh, what am I talking about? I've been showing nothing other than my title screen. That's my fault. So let's do this. Risk disclaimer. We understand risk and trading. You know the deal. Social media, follow me. Yes, sorry. We're way behind. So that was a nice little 5-minute intro of you just using your imagination, right? So anyway, here are the charts I was talking about. The SPY, the blue lines with the 7 and the 20% rally expected 12 and 24 months after rate hike cycle. I'm sure that's what I'm going to see comment-wise when I get into YouTube is, hey, Chris, we don't see anything. No screen, no screen. Yep. Share your screen. I see it. Okay. Sorry about that, everybody. All right. Morning, Donna. Morning, David. Morning, Chris. Morning, Brad. Morning, Ruthann. How are you? All right. Lawrence, good morning. Craig, good morning. Jose, what's happening, sir? Nice to see you. Volume should be okay, right? I'm pushing. I can turn it up a little bit. Let me see. Volume. We'll go a little louder. Testing, testing. There we go. Now I'm pushing into like the yellow and red on the decibels, so it should be a little bit louder. All right. Got the screen. Morning, Walt. Morning, Jacob. Moch, good morning. Okay. Scott, what's happening? All right. Morning, Catherine. Okay. So earnings this week. We have some notables. We have Lowe's reporting earnings this week. This is going to be Monday. Activision Blizzard, Spirit Airlines, Pinterest, Tyson Foods. We had big profits from ExxonMobil, Chevron. I think BP is this week. Valvoline's this week. Royal Caribbean Group, a little cruise line action. This RCL, Nintendo. How the video game sales going? Chipotle. I think McDonald's maybe this week. Western Union, Under Armour. We have some exposure in Under Armour. We just took a trade there. Yum Brands for your Taco Bell and Kentucky Fried Chicken lovers. Dominion Energy, Disney earnings this week. MGM Resorts, Pepsi, Toyota, Ford. Ford was actually a bit of a disappointment on their numbers. GM was better. Philip Morris, AstraZeneca, Duke Energy, Warner Music Group. So some notables this week. I wish I just had a number. Let me see if I have a stock twits. Let's see. I'll back here to stock twits for the week. Weekend rip. And let's see. Bullish for the weekend. Disney, Musk, businesses, date calendar, economic calendar. Earnings this week. Here we go. 357 companies. 357 companies. If you'd like a screenshot of it, I can take a little notable screenshot for everybody and show that real quick. Earnings this week. There we go. So right there, if you'd like to take a screenshot, or I can convert this into a hyperlink and throw it in the chat. Just let that pop up. There we go. Okay, so 357 companies reporting earnings this week. There it is. Get this out of the way. Currency strength chart overnight. I had a yearly or a monthly pivot for the euro dollar that hit my profit target. That was a nice little limit to start the week. So we took this trade last week in flex. I was short on the euro dollar. 109.40 was my entry. Pivot alarm went off at 107.60, and I was limited out. So that was a nice little trade there. There's probably more to it, to the downside if you're still in. There's always kind of the way to play it where traders ask, what can I do? What can I do about 200 pips? Well, if you're in at 109.40, which is a pretty decent entry right here, and price is right there. Couple things. One is put a stop loss in to eliminate all your risk, and then let your profits run. Two, Move that stop loss a little bit tighter, turn it into a trailing stop loss. Let your profits run or trap your profit. Or 3, close the position and walk away with your profit. I mean, we always have options. It's never going to be the perfect answer, right? Because you take profit here and then price goes lower. You're like, oh, I shoulda, right? Or you put in a trailing stop loss and then the market comes back and stops you out. You're like, oh, I shoulda. So whatever you do, you got to be okay with the decision. So I just took profit. I'm done. Do I think I get a pullback here that I can look for more downside? Sure. But I'll wait for that pullback and see if we get it. All right. Otherwise, we had a weaker JPY. They came out screaming overnight. It was essentially the start of the market. So the JPY got super weak right away. Has proceeded to continue to get lower and weaker. The dollar, the pound, and the Swiss on top today. We got everything else baseline: Aussie, New Zealand, Euro, CAD. And like I said, big story is just seeing JPY weakness, which we've seen plenty of, and plenty of indecision on the JPY. Here is a 4-hour chart. Let's go to the daily. We're going to see a lot of indecision here. So daily time frame, Aussie yen, slop suey, chop suey. It's gross. I don't like it. Technically, CAD yen. Is this right? Is anyone showing this on CAD yen with a pretty obvious gap? Let me see here. Yeah, it looks like we did have a gap there. Okay. That is interesting. We don't see that a lot in Forex. So, I mean, gap open, you can see within the first hour it tried to fill it. It did. I mean, essentially it's within just a couple of pips, but I'll be curious to see if the CAD yen still makes its way back down into this, daily, and we have a daily pivot right here to fill that gap. So we'll see. But anyway, it's rare to get these big weekend gaps in Forex pairs. When we do, we typically fill them. Swiss yen, still messy. Go back to the daily time frame. Another gap to the upside here. Yeah, I'm just not chasing JPY stuff. That's all. Euro yen, gap to the upside. Now, I will say this: if the gap still exists, I mean, take a look at this daily chart on the euro yen from last week's close. Okay, last week's close around 141.60 to our open. I mean, there's a pretty noticeable gap right there. So that was the high from last week. That was the close. So there could be some opportunity to maybe exploit that gap, and maybe even, I mean, it's not a bad spot to look at it now, and we look to fill that gap. Maybe come down to the weekly pivot with a stop loss above. So maybe a little scalp activity. And again, what you're going to see in real time would be something like this. You'll see the blue line start to creep up here, start to cross back up, and make a run back to equilibrium after having some type of aggressive gap at the open. So it looks like that's what all the JPY crosses are doing at this time. Pound yen, not as noticeable. New Zealand yen already filled. Dollar yen, that's not a bad one there. So there's the gap, equal highs. I mean, a stop sell is probably not a bad spot there. It's about 100 pips. If we get filled on a stop sell, stop loss above, just an aggressive move to fill. There's two spots. One is to come in and fill this gap. So that's target 1. And then this nice little pivot cluster, we have a daily and a weekly sitting right there around 130. So versus, and I've had a bad experience doing this in the past, and I've had some success trading gaps over my career, but all it takes is one bad one, and you're like, what am I doing? Example being, oh, I'm going to short at this high, and then price proceeds to go way, way higher. You're like, oh, fudge, what am I doing now? So I think a stop sell is better. Let price actually confirm and then make its way down to fill the gap. Might take a day or two, but that's a much cleaner entry and cleaner trade than trying to call the top right now. Just speaking from personal experience. Okay, so that's some yen pairs. Let's take a look at the dollar, oil, gold, silver. Interesting article this morning on Robinhood Snacks and all the reported earnings for oil. The investments continue to increase for green energy, even though it's still probably 10, 15, 20 years away. But we'll find out. I did short XOM last week. And we kicked these out to April, but I like these trades overall. If we're above 122 profit, actually it's above 125. We're above 125 profit. if we're down below 105 profit. In the middle, if it stays here over the next 2 months, which I think is kind of difficult, then I would lose a max of like $1.50 or something. Otherwise, there's 3 and change to this side, 3 and change to this side to make a bigger win than loss. So that's ExxonMobil. From the higher time frame, I mean, this thing is sitting at all-time highs. So with overbought conditions plus some divergence, maybe a movement back down towards the yearly pivot around $100 or $95, I decided to take that short in Exxon. Oil, let's go dollar index, oil, gold, silver. So dollar came in hot last week, the last couple of days, right? Thursday, Friday last week were big bullish days on the dollar. The Friday continued. I'm looking at the dollar to continue a little bit of a surge. We had some overstretched conditions, some divergence on the downside, and I was looking for the bulls to step up, and they did. So I think if the dollar can make its way back up to this high, let's say the dollar index, this is DXY, goes back to 105. We're trading above 100 now. If we get back to 105, I can see the dollar putting in a bit of a bottom, coming back in for some near-term strength and some pocket activity around 108. And then from there, it's possibly a range or a rejection. I mean, this is going to be the biggest fighting point for the dollar, but I think we get there to find some equilibrium after having this big high and then a drop back down. So, and that went along with the averages we thought. I think I shared that chart not too long ago, maybe 2-3 weeks ago. I shared a chart that showed kind of the historical highs and lows of dollars when we had these big moves. 13% was average, or 13-14% was average, and I think we were sitting around 12.5%, on this recent move. So I think the dollar did end up dropping from high to low. We put in about a 12.25% drop. So that did go kind of right along with historical averages. And again, we could go lower, but I think for right now, if the dollar is going to maintain bid, work its way back up here, challenge a level, I think we have a correction coming back into this zone. And then, like I said, either dollar resumes to the downside, and this would be, risk off. I'll put risk on. Okay, risk on up here. I'm sorry, that's my fault. Risk off. Risk off is on top. So if the dollar continues strength, that'd be risk off trading in a risk off environment. And then this would be risk on. Risk on would be weaker dollar to resume. Okay, any questions on that? All right, that's dollar index. Oil. This price action is pretty strange. I don't know. Let me see if there's the, let's see, OPEC. There's a CME OPEC watch tool. We haven't checked on this in a while, but this is about production and quantity. So there's no schedule. Let's see. History, open interest, data. Is this not as good as it once was? Let's see here. Check back when we're closer to the latest data. Okay, commitment of traders. Anything? All right, long position, short position, spread positions. Open interest and options. History. I'm just looking for anything with production. All right, so here we go. This says, this is from December 2nd, probability history. So this isn't really giving us any future forecast. All right. So I'll come back and check this, but basically what I was going to say is, look, China is reopening, right? It's surprising that with that reopening, we're not necessarily getting major bid in oil. We are getting other commodities. I mean, silver's been pretty strong. Copper's been pretty strong. Aluminum has been holding in there. Metals have been doing pretty well. I mean, CLF last week. This did reject, but basically, up here towards $21, $22. United States Steel had a nice little run up towards 31 and change. Rejected a little bit. Let's talk metals for a second, or copper. FCX pulling back a little bit to 42.61. I'll gladly look at buying some dips on copper. Alcoa got up as high as around $56. It's dipped a little bit, but commodities for the most part are holding pretty well. XAG, this is silver. Silver had a big drop last week towards the last 2 days. Now, again, I've said this for a while. If you're watching everything against the dollar, right? This is silver versus the dollar. The dollar was strong last week for 2 days. Thursday, Friday last week. That's Thursday, that's Friday. So you can see that strength in dollar is weakening silver. Strength in dollar is probably weakening gold as well. Yes, there's gold. And as I've talked about the last couple of weeks, I expected some dollar strength. And if we had dollar strength, we're probably going to see silver and gold pull back. And we had both. So does silver and gold, do they drop here? A little flag more to the downside. Maybe the dollar gets a little bit stronger. This is a nice level on gold of past resistance and support. Little breakout pointer on 1833. Last week I said 1850 to 1825. Little trend line break. That area looking for some bullishness to resume. So again, DXY is going to be a pretty big catalyst for what we do with gold and silver. I'm still long on silver. I'm looking for opportunities to get back in on gold. We had some good trades last 3-4 months. This was, let's see, September, November, December. We had 4 months essentially of trading gold with some credit spreads. All are profitable, and I think we closed up all of these. So between a dollar spread or $5 spread, we had some pretty good profits on GLD. So now I'd consider looking at the same area. Maybe this, if we come back down towards 170, maybe starting to look at this 170 area. Is GLD something I want to own necessarily? No, not really. Personally, I'm not going to tie up, $15,000 to own it. But I could look at some credit spreads around this area to see if we get some levels. So if we want to trade the dollar, this would have been close actually. I had an options trade on the UUP. It was a 28.50 by 28. I still would have taken a loss on it overall, but the timing was just off by a little bit. If I would have rolled this out, maybe into late February or March, this is probably going to be a trade that was fine. But it is what it is. Took small losses on UUP, no big deal. Okay, Lawrence, any stockbroker, man. You can trade the SPY with any stockbroker. I use Schwab, I use Interactive Brokers, I use TD Ameritrade. TD Ameritrade is Thinkorswim. There's E-Trade, there's Fidelity. I mean, you can go the classic app route. You want to use Robinhood or Webull. Those are totally fine for just using your phone a lot for trading. But any stockbroker, you can trade the SPY. Yep, it's just an ETF, man. Easy, easy. All right, any questions? So this week, we have a pretty healthy earnings calendar. I'm going to keep an eye on the dollar. And like I said, there's not a ton of economic news that I saw this week. I mean, we were able to get through the Fed, right? We got through the Fed. We went through non-farm payroll to kick off the month. Australia looking to raise rates later tonight by another 25 basis points. Powell speaker, Fed speaker, pound monetary policy, GDP for the pound, unemployment for the CAD. Okay, so I just see one rate hike coming out of Australia this week, which will make this Aussie New Zealand situation a little bit more interesting. A lot of indecision here between 110 and 109. Our long trades we took profit on. I'm curious if this is heading higher, heading lower. Not sure yet. So we could watch a little box right there for some breakouts on the Aussie New Zealand. Right now, the New Zealand is still the higher of the two cash rates. So I'm wondering if it just settles in as that divergence is going to push the Kiwi a little bit stronger. But I'm not fighting this yet. So we haven't really had a trade in the last couple weeks on the Aussie New Zealand. I was looking for something that we like. So, all right, that's it. Equities on demand class in the next 5 minutes. Monday through Friday for EOD. Flex traders Tuesday, Wednesday, Thursday. Let's get some good moves on the Forex pairs. Let's see what we have for the dollar volatility. Any other major news that I see. It's kind of a lighter week after we got through the first week. But there'll be some movement. I think a lot of it's going to be influenced by the dollar. And that old tricky yen moving all over the place. If I will say this, we'll come to class tomorrow for the flex traders. If we still have some gaps on these yen crosses, let's take a closer look at those. That might give us some short-term opportunity this week to fill some of those gaps. Okay, All right, traders, I'll let you go. For YouTube, I'll be back on Friday, 9:30 a.m. for opening bell. And traders in the trading rooms this week, let's have a great week. All right, talk to you soon. Happy trading, lots of profits. Bye.